Hello, everyone. This is Martin. Welcome back to another weekly forecast on the trading opportunities that I'm looking at for this coming week. And we're talking about July the 17th to the 21st. We've got a lot of good opportunities. The theme for this week is caution. Caution after last week's big moves. Now, what do I mean by last week's big moves? Well, last week, some of the currency pairs moved quite a bit more than normal, and in part that was due to Friday's disappointing economic news from the U.S. So we're going to take a look at that in just a second. And the other thing is the other currencies in the meantime are posting some pretty good economic news, including the Canadian dollar. The Canadian banks, as you know, raised their interest rates last week by 1/4%, and that really helped propel the Canadian dollar, especially against the US. So we're going to take a look at what happened last week just briefly, and then more importantly, take a look at what I see as good trading opportunities for this coming week. So let's get ready to hop on our rocket ship. We're traveling to the planet called Forex. Okay? Okay, before we look at the currency pairs, as always, I just want to post this risk disclaimer. This is really important. If you haven't done so already, you can always pause this video. Please read this. The main thing that I'm trying to tell you is that this video presentation is for educational purposes, okay? And what I'm looking at in the markets may definitely change over the course of the next few days. As always, the market changes dynamically, and what I'm posting today is what I see, what I think will happen. However, my opinion, my analysis may change according to market news that's going to be happening over the coming days. Okay, so that's really important. Everything I talk about is not considered to be specific investment or trading advice. Keep that in mind. And always view this video at your own risk. You are solely responsible for your own trading decisions. Okay? So, having said that, we are now going to start. Okay. Okay, once again, remember the theme for this week is caution after last week's big move. And what do I really mean about that? Well, on Friday, July the 14th, the Fundy news or news that's centered around fundamental analysis, of which the news that came out on Friday, and we want to take a look at that. Here are the CPI news, core retail sales, and so on. You can see everything here. I'm just going to mark that. Everything here is in red. So you don't have to be an expert. You just have to know where to look for the information. And the first thing I advise everyone to do every single day before you start trading is go to forexfactory.com. So you can type in www.forexfactory.com/calendar. You're going to find this calendar in your own real time, okay? And I'm just going to just a second here. Okay, I'm going to show you really quickly here that the calendar, they've got economic news coming out every single day, Sunday, Monday, Tuesday. I'm just scrolling down for you right here, okay? And all you have to do is take a look on the particular day that you're interested in trading. In this case, let's say if you're trading on a Friday, in the morning you'd open this up, or the night before take a look at the news for the next following day. Take a look, anything that's coded in red, like these it's highlighted in red here, red, you can see that's most important news that will impact the markets in the most severest way. And all you have to see here is that once news comes out, it comes out to the millisecond in real time. If it's red, the news is bad. If If it's green, the news is good, and immediately the currency pairs will go up or down accordingly. Now, on Wednesday, the Canadian dollar, and let's go back to Wednesday here, right here. The Canadian dollar, this was red coded right here. This was the overnight rate where the banks would state their interest rate. In this case, they raised interest rate by a quarter of percent. Previously, it was 0.50, raised it by a quarter percent. And on Wednesday, that had a really huge impact on the Canadian dollar, especially against the US and some other currencies. So the Canadian dollar strengthened and US dollar weakened on that particular currency pair. So always remember to go to forexfactory.com to get the latest information, okay? And we're now going to head off to the specific currency pairs for a look-see at what's happening for this coming week. Okay, everyone, the very first currency pair is the Euro USD Daily. This is the daily chart, and you can see this red vertical line. This was the previous week, and from the right side, right of this red dash line, we had last week's trading. So here, the very first candle Sunday, Monday. The big white bullish candle was Tuesday's trading. The black bearish was Wednesday, Thursday, and on Friday we had another huge up candle in white here. So these are the 5 trading days of last week, and you can see that price had basically gone up, down. Now it's up again at resistance. I want you to pay attention. Right above here is the very long-term resistance. You can see this magenta line. So right now, this is this gray rectangle also depicts another long-term resistance, but if price was to break higher, it's going to come up to this area right here. So pay attention to that. We are at resistance, and with the theme of this week, caution, caution, caution. Will price continue going up just a wee bit higher and then turn right around, or will price actually turn around right here, bounce off this resistance, and come back lower before attempting perhaps to go again much higher? You can see I've drawn in this short little trend line in magenta here. This shows that price may come back down. If it breaks this line here, it'll come down to here, or this gray rectangle, which is the next major support zone. So if we believe price is going to go higher, then we want to possibly look at a buy above 1.11520. 1.1520 to the upside, and if we think price is going to go lower, we can sell below 114.26. Okay, take a look at the MACD right here. We have a bearish histobar, and we have one bearish histobar on the long-term trend. Again, this is a new indicator that I put on. This is long-term here. This indicator right here is short-term. So I look at both together to determine what's going to happen. So caution here. We had a big up day on Friday. Again, be aware that price may go higher or may turn around right now, go lower, maybe, and then bounce higher once again. Okay. Now we get to the British pound. Look at this pair right here. Wow, we had a huge rocket ship last week. On the weekly, we had a bullish engulfing candle, which means that price most likely will continue going further higher. We also had a bullish engulfing candle on the Euro USD as well as the Audi USD. So keep that in mind. All the pairs, all the currencies trading against the USD are trending higher for the most part because of weakness in the US currency. There's a lot of poor economic news coming out for the US, and I'm not too sure if they can even sustain that. I mean, they will have to, the US currency, the US dollar will have to do much better. The news coming out of the US has to do much better for them to even justify a further interest rate hike later on in the fall. So just keep that in mind. News isn't that great. News, however, out of the European markets, the Australian markets, Canadian markets have been really, really good. So just keep that in mind here. Now, this I'm going to again caution you. That's the theme for this week. This is a huge candle. Look to the left. When was the last time you saw a candle move up 178 pips? That was the movement on Friday. Take a look now. The news from Britain has been really good, was really good last week. So, coupled with the good news out of Britain and bad news in the US, you can see what's happened here. Last week was a great trading week for the British pound. And take a look to the back. See, the last time we had a big bear bullish move like this was where? Way back here, back in, take a look below, April, about middle of April. Okay, so well, after this big bullish move, take a look right here. What happened? Well, price actually went down and sideways before continuing higher. Here I expect price to come down, possibly sideways, then continue higher. So again, look for a pullback or a retracement, okay? And uh, if we believe that the price can continue higher, watch. I would buy only above 130, 130. So if price is going to go higher, that's the area I would buy above 130, 130. However, I would wait for a retracement first. After a big move like this, there's usually a pullback or retracement, and then you can look for evidence to the upside again once the overall uptrend continues. Okay, now we get to the Australian USD. Same thing. I mean, look at that. When was the last time we saw a huge bullish move like that? Last Friday, that was 108 pips. That's pretty darn good. Now, for your convenience, I've drawn in these two horizontal lines. These represent extreme long-term resistance just ahead. So after a big move like this, I kind of expect a pullback as well, just like the British pound, and be very cautious. Again, that's the theme for this week. It is trending higher. Obviously, this pair is trending higher, but because of the big, huge bullish move last week, and the volatility of I mean, look at this: one, two, three, four, huge candles, all basically just flying to the moon. So we want to be very cautious, and if we believe price is going to go higher, I would kind of wait. The upside, probably not much to the upside. I would wait for retracement, wait for evidences that price is turning around to the upside again. So wait for the pullback first, and then look for bullish buying activity. Now, as well, let's go to gold for a second. Gold, you can see, also had a huge move up. That in turn helped the Australian dollar. With other good news from, like I said, for Australia, helping that currency pair retain its strength, especially against the U.S. But here again, this is really important. Look at this red dash line. That's the 200 simple moving average. So there's usually a bounce off a 200 moving average. So I would expect a bit of a retracement pullback, and that again coincides with here's the Australian dollar again. Waiting, after a big, huge move up, I would wait for a pullback as well before perhaps a resumption in the uptrend. Okay, now we get to the New Zealand USD. A couple of times, let's take a look at this. Here is long-term resistance. If price breaks higher, notice I've drawn a trend line joining the bottom here, and price may go up a bit higher to this horizontal magenta line right there. Okay, and this is really long-term resistance. So the next resistance is this area right here, but price may stall right here and just come back down and retrace before making its next move. And again, that's what I mentioned with respect to this week's theme. Caution, caution, caution. Here we can see that we tried once to break through, we tried twice to break through, three times, four times could be the lucky charm. But again, this is right here, the next resistance. Okay, so just again, extreme caution. Okay, now we move to the what's next? The US CAD. Now take a look at this. Here we go in the opposite direction. In this pair, the US is the first currency, and it's trading against the CAD. and the US is weak. The Canadian dollar is extremely strong. We've had a huge down move. And remember in the past, a few weeks ago, we had this was a bearish upside down flag, and we had another move down in this once we broke the bearish flag. The number of pips from here to here almost equals from here to here. So that's what you can expect when a price breaks a bearish upside down flag, and that's exactly what happened. So now we've broken down again, and we've actually broken a longer term support with this gray rectangle. Where is this price going to go? Well, I'm just going to move this down a bit. You can see here's the next area of support. Here's another extreme area of support. Price is trending lower. I expect price to go down. However, again, as everything else, perhaps you can wait for a pullback and then resumption of a trade to the downside, the break below this candle right here. If you believe price is going to go lower, you can sell below 126.40, or like I said, wait for the retracement. Okay, wait for the retracement and then a resumption of the downtrend. Okay. So let's take that off. And the next pair is, well, it's not a pair, but it's oil. Again, let's take a look. US CAD down. That means Canadian dollar strong. And of course, oil in tandem with the Canadian dollar has been rising. However, again, take a look. We are now at long-term, not only the long-term moving average, this is the 50 simple moving average, but right above is a gray rectangle. This is resistance. And also take a look at another, this is the 89 moving average right here. So a confluence of resistance just ahead. So again, this pair may, not this pair, I'm sorry, oil may in fact come back down a bit. Okay, and you can always take a look at oil, see what it's doing, and then see how that's impacting on the CAD. Now we move to US Swiss franc. Here you can see basically sideways. Okay, this pattern is not doing much of anything. I'm going to draw in the tops here. Okay, you can see a bit of a pennant here. Um, this can be considered a bearish pennant. Price may come down lower, but basically it's sideways now right now. So I would wait. I would not really do anything with this pair. And if we believe price is going to go lower, you want to wait and sell below 0.9590. 0.9590, which would be down here somewhere. Okay. So just keep that in mind. And our final pair is the US Japanese. Here's the daily US Japanese pair. Down, down, down. US, of course, US weakness versus the Japanese strength. And you can see as of the previous Friday, prices come down and it's hitting or very close to a support zone. So price may come down a little bit lower, then bounce higher again. Take a look at the MACD below. The blue MACD line is curling, has already crossed the signal, the red signal line. It's coming down. If it goes below the zero, it's just going to come down further. But here's the red histobars, which is increased bearish momentum. That's what that means. And here on the longer term trending indicator, we already have a series of red momentum bars. So again, momentum to the downside is increasing. Or looking at the other way, with another eye, the uptrend has weakened significantly as soon as you see the red bars on a longer term trending indicator such as this one right here. Again, if you're looking for this indicator, shoot me an email. I'll give you my email address in just a moment, but I will send you the link for this indicator if you want. Okay. So here with this one, it's wait. We're waiting because we are near support, near a major support area. If we believe price is going to go lower, you would want to wait until price comes all the way past 111.50. So sell below 111.50. to the downside if the bearish activity continues, right? Or buy above 113.65, buy above 113.65 if we believe price is going to go higher. So that's the wrap up for this coming week. That's what I see. Again, remember, what I'm looking at on the charts is what I see right now on the weekend prior to the trading activity that opens up on Sunday. This is prior to Sunday's opening trading session, and what I'm seeing may change at any moment depending on what happens as the days go along. So again, trade at your own risk. But if you need any more information on what I'm doing, if you'd like any more help with your trading, send me an email. Okay. And now this is the information here. If you want my trending momentum indicator right here, send an email to Martin. That's me. MSKYJ007 at gmail.com. I thank you very much for watching this video. Take care. Have a really good trading week next week. Talk to you again soon. Bye.